So, Chris, thanks very much for joining. For the benefit of his colleagues that are not in attendance, Chris has logged into the platform using his data credentials. You should have received your data credentials already. Once I send that email, I don't have the ability to see your passwords. If you need new credentials, let me know. But assuming you've got your credentials and you've logged in, you arrive on the data dashboard, and Chris, it looks like you can confirm for your colleagues you already created, it looks like a couple of pins, most deceptive and least deceptive. Is that right?
Yeah, I believe so, yeah.
Yeah, thought so. So Chris, talk to us about like typically an investment workflow, and I know that you work on the quantitative space. An investment workflow still includes the big chunked up items of universe that I consider investable, and said another way, watch list or things worth investing in. Two, there's an exiting of that fishing pond, if you will. Then once something's in the criteria typically for why something would exit. Third would be, I'm going to do a deeper dive. And even in a pure quant space, there's a deeper analysis done once initial criteria are met. Then there's some level of due diligence taking place. And then there's either the buy or sell decision, and it could be it's pure quant, don't know. Some firms have pure quant decision engines. And then there's the ongoing maintenance of that portfolio and monitoring that portfolio. Talk to me about your investment process for bringing end. And the reason I'm asking you to do this is that will dictate for me, what I show you how to do and accomplish on the platform, because I'll try and make it as bespoke as possible for how you might use this. So if you like, how do you set up your fishing pond is the first question.
Yeah, so yeah, as we talked earlier, I mean, I head up our quantitative side, so but I also am involved in a few of our fundamental portfolios. I started my life on the fundamental side and then moved over to quant. So I'll describe more of that kind of fundamental process, really more of a quantamental. We kind of blend the two. So you're right. We do have the screen set up. First part of the process that kind of narrows the fishing pond. We have a handful of different portfolios, so there are different screens depending on the objective or mandate of a particular portfolio. From there, once we have that fishing pond that kind of sets the basic criteria we're going all of our holdings to have, then there's teams involved in each one, and we're all generalists, but everybody kind of has their area that they're responsible for, and it's then up to the individual to go through their area of coverage and come up with ideas for the portfolio. And then once we decide to put them in a portfolio, they're responsible for the ongoing maintenance of that position and ultimately the sell decision whenever it comes to that. So
that never comes. That never comes. Every investment works out.
That's what we like to think, but unfortunately, we do have to move on from names every once in a while. So that's very high level. I mean, kind of just what you described as far as our process. As far as we use. I mean, we have all sorts of internal and external sources to help feed into that process, whether it's our internal research or have access to sell side research from a handful of providers. We use Credit Suisse Holt, it's kind of cash flow, software that helps on the valuation side of names. So those are kind of the key parts of our process, I would say.
Got it. Cool. That's super helpful. I was taking notes on that. And it sounds like relative to my understanding of those workflows, each of those boxes is ticked off by you guys. All right. So let me ask you a follow-up question. Do you typically, or do you know if your colleagues typically as a part of that process create like portfolio watch lists where they watch their portfolios on other platforms, say Bloomberg or FactSet, and then maybe a separate watch list where they're conveniently can look at a glance some of those companies?
Yeah, I think most people do maintain some kind of universe, a shorter list of companies that they keep a close eye on. And yeah, I mean, at least I think most people are fairly similar to me. I mean, I have that set up, so I get stuff pushed to me from all of our different sources.
Cool.
Companies that, or
right.
Keywords that hit those areas of interest.
Yeah. All right, cool. All right. So I think then the first place to start to show you how to use the platform so that you can get a high convenience factor and a little bit more focused on your portfolio is we'll create a dashboard that's custom, and we can call it whatever you want, watch list, portfolio, whatever. We won't do the whole thing. I'll just show you how to do that. So the first thing to do on this dashboard screen is, you see that little on the left-hand side next to default dashboard, there's a little arrow with a vertical bar. There you go, click that. And then hit that plus symbol. We're going to create a dashboard. It's up in there. There you go. Key thing on our site, we've used purple or whatever blue. I'm a little colorblind. People tell me that's a purple. To me, it looks like a royal blue. On our site, all the purple are things that you can interact with and click on. So that's a quick guide. So I don't know what you want to call this, portfolio, watch list, whatever you want to call it. But go ahead and name that here. And then hit submit. So what you've done is you've just created a container for what we're going to do. It's okay, you don't need to add a view yet. We'll come back. This is how I do it. There are other ways to do it. I like to have the sort of container for my searches set up first. Now, if you click on database at the top part of your screen, should be data, dashboard, database, top bar. There you go. So database is the product that has it's already pre-scored for deceptiveness and truthfulness, almost every US equity of significance. So it's the S&P 500, 400, 600, Russell 2000, 1000, 3000. And I verified that we're only missing 12 companies out of that Russell 3000. And that's because they have ADRs or 20, and they file 20 Fs. We're going to be adding 20 Fs in the second quarter to have coverage, but we'll have all of those companies. So the next thing is in the search bar in the left, middle left, it should say enter company name or ticker. Go ahead and enter an equity that you would want on your watch list. And there's block. So now before you click on block, see the add tags button up above, that little block there? A little bit, there you go, perfect. So hit, now select block, perfect, you're getting it. And then next. And then you can name this tag. It could be watch list, it could be Chris's watch list, it could be whatever. Where it says add tags, just click on that field down below. Sorry, I wasn't very explicit. A little bit in the middle of the box there. Perfect. So whatever you want to name this tag, we're going to dump these tags can be nested and layered. So it could say, yeah, perfect, fintech. So there you go. You hit enter. You can create another one or not. Yeah, apply. Or go ahead, apply changes. So now you can see on the right-hand side next to block, it says fintech. So it's added that tag there. Let's go ahead and do another one that you might want in that fintech watch list. You have to back, there you go. PayPal. Cool. So same thing. And then after we've done these two, we'll move on. Yeah, perfect. Yay. But by the way, this is cool to see that it's simple and logical, so that like you got it on the second try, like how to do it. Okay, cool. So now delete PayPal out of the search bar so we can then do a search on your tags. What would happen if you searched on tags right now is that it only pull up PayPal because it would be trying to satisfy two criteria. So just above where you are, no, actually, just where it says screen, right above where you are, click on that. And now you're going to select tags. And you can select fintech and then add. And this is how you can quickly create a portfolio meeting whatever criteria. You can nest them as well. So for example, like I used to be a generalist PM. So it's entirely possible I would have my ticker symbol, RPFCX, Davis Appreciation Income Fund, but then I might have like an industry tag as well. And then I might have like watch list, and you can nest these and layer your tagging, which then becomes how you can navigate the platform and chunk things up into contexts that mean something. So now on the right-hand side of your screen, a little tiny icon looks like a pin. It's purple. There you go. Perfect. You can pin this now. Go ahead and click that. And this view, you can call fintech, or you can call it whatever you want. Doesn't really matter. Save the view. That way, when you log in, and you can save views. Now I would pin this to your dashboard that you created before. watch list. Perfect. So this is how you can very quickly create portfolios. Foolishly, we, and full confession, guys who've been in finance, myself and my co-founder for years and years, we did not think to ask our developers to put an upload CSV file so you could just simply upload your ticker symbols to create a portfolio. We're like 2 weeks away from being able to do that. My apologies that this is the way you create a portfolio. So imagine now that you've got your portfolio created, could be whatever, 50 securities, 60 securities. Now, when you log in, go back to dashboard, Chris, upper left-hand corner. We're going to favorite that dashboard, so it could be the first thing you see. That little file on the left-hand panel above the arrow we clicked on before. Yeah, perfect. It will bring up all of your dashboards. And now if you choose to, you can set watch list as your favorite. And when you log in, that would be the first thing that you would see, as opposed to the default dashboard. It doesn't really matter. Now, if you click on dashboard in the top bar again, there you go. Cool. All right, so there's that dashboard, and you can live click within the watch list there to look at securities that you want to in greater detail. And once this is set, as new documents are updated, it automatically updates. You don't have to rebuild. This is not frozen in time. It's a dynamic watch list, or it's a dynamic dashboard. So as new documents are published in near real time, they'll show up here. So once you've created this, you don't have to do a lot of tweaking to it. So now let's go back to database. We'll call that you've created a portfolio. At a later time, you can add additional securities there. Also, because of my heartfelt apology that you can't conveniently add a portfolio, if you're comfortable with it, if your teammates are comfortable with it, send me your passwords. I don't have a record of your passwords, and I would be happy to add a watch list in lieu of being able to do it. We're trying to deliver white glove service to you guys so that you find tremendous convenience with the platform and immediately can solve business problems. Okay, so from here, this screen, is there a benchmark that you are tasked with beating by any chance?
I'd say like a Russell 3000 growth.
Russell 3000 growth. We don't specifically have Russell 3000 growth demarcated. Let's screen though on, say, Russell 2000, if you don't mind. So hit that screen button. Indices, Russell 2000, perfect. And you'll see it says 1,811 companies. Part of why it says that is you guys are on the free trial for what we call validation window, where you can validate the platform. Some of the companies haven't quite published their Ks yet, and so that's led to a lag, but I have verified all of the Russell 2000 are in here, but for a handful of ADRs that filed 20Fs. Sometime second quarter, all of those will be there. By the way, this list will also change at the end of the quarter. This Friday is the 31st of March, and we check our indices every quarter to make sure we have the correct components. And I have verified already that we have all of the tickers in there. So let's talk about use case one. Use case one would be fishing pond, right? So we've pre-selected here on your index. By the way, you could save this view if you wanted to. I think it's a little probably too high level for most use cases. Let's imagine you wanted to create a fishing pond that was free of downside, right? And one of the things that we've demonstrated with our platform, and we've got research on, is, are data scores predictive of future securities returns? And the answer is they are, both in meaning that positive data scores tend to be predictive of future positive outcomes, and negative data scores are predictive of future negative outcomes. So imagine you want to set up your fishing pond, use case one. You can sort on data score, and go ahead and hit that screen button again, Chris. And if you scroll down, you should see data score. There you go. And it's going to bring up a little interactive thing. You could say, we just don't want to invest in anybody who scores, and about one standard deviation below the mean is around -8. You could say, hey, we'll tolerate a little bit of deceptiveness. And then that right-hand slider, move up to maybe 100%. And then if you hit add, now you have a subset of that set of documents. that only scores positive. If you click on the data score column now, it'll change the filtering. So there you go. There's the most deceptive firm currently in the Russell 2000. If you click it again, it'll change the sort the other way. So conceivably, you could use this to establish the fishing pond. In fact, one of the folks that's on the platform right now is an asset owner of scale. You'd know them if we named them, and that's their principal use case. They're like, we don't want anybody who is likely guilty of fraud in the data set. So their screen, if I'm not mistaken, is they actually have skewed on the positive side. They're like, we only want companies that score one standard deviation above the mean. The mean's about 5%, and the standard deviation is 13. So basically 18% and above. So this would be one way that you could set up a fishing pond, and this could be an additional factor for you guys to make sure that some of the grunt force out of examining for fraud and reading the financial statements is kind of done here. One of the findings that we know is that more extreme scores, meaning the high levels of deceptiveness, do correlate with fraud. So for example, that data score right there, deception truth analysis score, it's really difficult in the aggregate to have a high data score that scores as deceptive. It means a large portion of what they're reporting is deceptive. So that can be how you set that fishing pond. If you want to export these results, in the upper right-hand corner there, there's export.csv right there. And that would then create a file that will export to your desktop. All of that is also able to be searched on via API. I don't know, Chris, as a quant guy, do you use APIs or CSV more?
I would say more CSV. If we get into that kind of stuff, we have a team that can help us out. That can, we'd use the APIs and grab data and put it into our internal system.
Cool.
So
cool,
we
cool.
do it. It's just personally, I don't. It's a separate team.
Cool, got it. So that's how you could use that feature if you wanted to. If you wanted to get even more granular, say, for example, somebody on your team, I heard you say that in your workflows, your guys frequently, once something has exited the fishing pond, it's given to somebody else who may have industry specialization. Did I hear that correctly?
Yeah.
Okay, so do me a favor, and on the upper right-hand corner, you'll see 3 dots right below your name. Okay, so here are the other criteria you can add. If you go in there and you scroll down, you'll see sectors, and we have industry codes that you can filter on. So go ahead and turn one of those on. And we have industry categorization by Yahoo Finance, which is the industry bit, or industry codes, which is either NAICS or SIC code. And this could be how you could add, and go ahead and click out of that box, and it'll now add industry information. And you'd have to scroll to the right. It's a little bit larger than the window is there. So conceivably, now you've got those industries. Is one of your team members, do you already know the industry that they are primarily responsible for by any chance?
Yeah, biotech is one of them.
Okay, so go back over to your screen function, middle, that's now middle of your screen, and you can select industry. There you go. And you can type in biotechnology there. And so now for your colleague who's primarily responsible for biotech, they could conceivably save this pin to their dashboard, and they would have a bird's eye level view of the ongoing level of deceptiveness and truthfulness at these individual companies. So this is one way that you can set up the fishing pond very clearly. We are going to be adding in probably going to be 3 or 4 weeks. I'm checking in with my knowledge of our development calendar. What a percentage change since last quarter or last year-over-year change for these documents. So you can build a screen then on percentage change. So for example, I as a fundamental guy would want to know, okay, look, I've already established and comfortable with these companies tend to be most truthful. These are the companies that tend to be most deceptive. What about state change? And that could then become a criteria to search on, to build a filter on. You could be like, companies sorted on largest data score change year over year, which then becomes a watch list for if it's changed a lot, I really want to pay attention to it. And that's how something exits the fishing pond. Or if you're already a buyer of that security and you're long it, that could become then something where you would want to dig in further to examine it. So any questions so far on this material?
No, sounds good. I think I'm tracking pretty well here with what some of the capabilities are.
Cool. All right, wonderful. And so then let's go ahead and clear your filters. You can just X those filters out, or you can keep them up. Your call. I want to do a fundamental dive on a company you're especially interested in. So just go ahead and enter one company in there, because now we're switching to the next bit of the workflow. Now we're switching and block. Did you choose block because of the Hindenburg analysis?
No, not really. I mean, it's just top of mind. I kind of cover the fintech space.
Type in block instead of its ticker. Type in block. It looks like a bunch of companies satisfy SQ. There you go. So go ahead and click on block. And so now we're imagining in our workflow, fishing pond established. I'm only investing in companies that data has assessed as being truthful. So I've protected my downside probably quite a bit. It's also really hard. It's about 2/3 of our companies in the aggregate scores truthful. So essentially you've lopped off the bottom third. As I said before, they are predictive of downside. So we've got a fishing pond that's clean. So data could be used as a hygiene factor. Soon we'll have the ability to sort on state changes, which might be a factor of exiting the fishing pond. Or you could set up another thing. The other criteria would be, I'm always interested in companies that score 1 standard deviation above or 2 standard deviations above. Why? Maybe you've done your own validation work that shows that's predictive of outperformance. We've done our own validation work, and I fully recognize the skepticism of back tests. I hate back tests as a former fund manager myself. But if you've done your own back test, you can check that out for yourself. We have done that back test. We actually find that the higher the truthful score, that outperforms that strategy versus lopping off the bottom. Like the sex appeal seems to be in deceptiveness because most people are concerned about downside risk, but we've actually found that the upside outperforms. Our theory of that is that if you have good performance at your company, you're effusive about it. You're absolutely telling the truth about it because you want the whole world to notice. And so we've noticed that highly truthful scores outperform. So you could conceivably exit the fishing pond because I want to look at the companies that are most truthful in that data set. So anyway, we've now on the fundamental part. Okay, something has caused you guys to want to take a deeper dive. And as an aid, decision-making aid, I want to use data to zero in on possible key issues. So here's block. You can see its data score represented in time series in that upper left-hand graph. Our data scores, that's our primary output. They range between minus 100% and plus 100%. Any negative score indicates a level of deceptiveness, any positive score level of truthfulness. So you can see here that block in the aggregate, going back to, it looks like when it went public, looks like third quarter, maybe 2016, could be second quarter 2016, has scored in the aggregate as truthful. So not necessarily very interesting, but you may want the intra-document view. We have found that most companies score as truthful, but what they're being deceptive about is absolutely key. And this is where we can begin to provide a valuable assist. Scroll down to the bottom, Chris. That time series is made up of the documents scored down below. Keep scrolling down.
Okay. This min-max, or is that through the whole platform? Is that why it's basically?
That's exactly right.
Okay.
Yeah. So in other words, that's how it relates to other documents in the whole universe. And then we've got on the right-hand side, the min-max relative to its industry grouping. So you can see that those are narrower bands where it says from index average, from industry average. The index average is its primary index. So for example, if it's in a couple of indices, we've made a judgment call to choose what is the primary index. If something is in the Dow, we call Dow prime, or sorry, that's not true. If it's in the S&P 500, it gets S&P. So you'll never see Dow here. It'll be S&P 500. If it's also an S&P 500 and Russell 3000, which it would be, it's going to be from index average is going to be the S&P 500. We're thinking about toggling that so you can choose the index that you want to compare it to, because we recognize that people want to compare it to a benchmark index. So scroll down to the bottom though, and there are the documents that make up that time series view that you're seeing, and that you can see that block Hindenburg, as you know, just a couple like last week, evaluated, said that this is a short candidate and their key issues that block ought to be being criticized for. I have not read that report. Have you, Chris?
Just the snippets that you see in the press. I haven't actually read the full report.
Okay, cool. In just a second, we're going to go and do the intra-document view, which we call Redline, which is our premium feature. If you're a database subscriber, and some of the pure quant folks on the platform are pure quant, they don't really care about the underlying language associated with these fragments, but your colleagues who are fundamental might. We'll do that in just a second. If you're pure quant, because the data score tends to be predictive of future output, you can export all of these data scores. You could use them in your work and create a trading rule based on that, or a decision rule based on that. Other primary outputs from the platform include the number of negative fragments there, which you'll see to the right of the data score. And so that says that within this 10Q, yes, it scores in the aggregate as truthful, but there are 28 sections where they are being deceptive. In fact, it makes up more than 50% of the subsections of that document. So that may satisfy. I think if I'm a fundamental guy, that probably doesn't satisfy me. I probably want to do the intra-document view. So Chris, your instincts were correct. Roll over the 28 again, and we can go in there and check the red line. Click on that, either that button or the red line button. It doesn't matter. I can restore that for you since we're doing a demo. This will click off one of your settings. Right. Yeah. All right. So this is for us. We think if you're a fundamental investor, must have, not a nice to have. On the left-hand side, we render the document in its entirety. The grayed out portions we don't score. Data algorithm works based on understanding narrative rather than red flag words. And so because we're looking at how the language is used, certain things like table of contents, we don't necessarily want to score. So that's the 10Q. We're adding earnings call transcripts imminently in the next several weeks. Then you'll have the earnings call transcript on the left-hand side. We're also going to be adding other document types like 8Ks. We're going to be adding proxy statements, S1s, which will have only limited utility during the IPO period. On the right-hand side, though, you can see the red line view, which is the map of ongoing truthfulness from 0 to 100% on the right, and deceptiveness 0 to minus 100 on the left. If you click on one of those fragments, go ahead. That will show you what they're being most deceptive about according to us. And so that has clicked on, and I've looked at the block report, not Hindenburg's report, but I've looked at their 10Q because another client requested to look at it. And to me, they're being deceptive about something having to do with this convertible note. And if I remember correctly, they're using converts to hedge some of the risk in their portfolio. And they've made changes to this convertible. And so this is what we're assessing as being most deceptive. I have not read the Hindenburg report. You said you glanced at, Chris. What did they identify that was of concern at what?
No, I mean, the big one was just about user accounts, and that I can't remember what percentage, like 30, 40% of accounts are not legitimate accounts. And there's a lot of fraud going on through these accounts. So anybody can have multiple accounts tied to one user, and you can transfer money from multiple people to one user. And that was the gist of the main features they brought up.
So again, via API, these individual fragment scores are available for export, as are the bits of language that trigger this. So a quant hedge fund, pure quant, but they do NLP work as well. They're using the fragment export and API, and they're exporting presumably based on some decision criteria, like most deceptive, top 3 fragments. They do additional NLP work on it. If you click on some of those other sections, just like that second most deceptive one, I'm curious about, right above that most deceptive. Yeah, again, the convertible notes.
Same issue.
Yeah, all right. So Interesting enough, I used to use converts in my strategy, and they're using them for hedging some sort of risk in their portfolio. I don't know block what they do for business, but it's interesting they're using converts as hedges. And what about some of those other super red fragments? I'm just curious. Indulge me. Bitcoin revenue. Looks like expense structure. Huh, interesting. So this is an example of if you were initiating coverage, for example, on Square or Block rather, and you know, say pretend Hindenburg hadn't keyed you into these key issues, but you're initiating coverage, or you're in the earnings call morass, which is the annual earnings season, and you can't read all the Qs or Ks that are published. Conceivably, you can use us to quickly digest what some of the key issues are to sharpen your question set. Or imagine you're initiating coverage on Block and you haven't built your model yet, valuation model. I don't know if your team builds valuation models or not, but if they did, they could check some of their assumptions relative to these deceptive fragments. And they, for example, in this expense structure bit here for Block, that might lead me to update or change or experiment with different values in my valuation model. For example, I saw SG&A in there was scoring as deceptive. I might want to bump that up. General administration expenses were whatever percent. I might want to bump that up because they're scoring as deceptive. And then, of course, if there's a relationship with investor relations or a CFO or controller at Block, you might want to call them up and, you know, really sharpen your questions for them about those assumptions. That fragment about the convertible notes, that score minus 55-ish%, it looks like to me eyeballing, that is about Enron level of deceptiveness. That would really concern me. And I would really want to understand their hedges and what they're using their hedges for. Any questions so far?
No, makes sense.
Perfect. So the other use case I want to highlight, I think we've covered most of the likely use cases. If you were, and I'll say it again, in earnings season, and you had your portfolio up and you wanted to quickly digest the Ks or Qs, because you don't have time to read them all. Oftentimes we're playing catch up as research analysts or PMs, right? We're counting on the street telling us what the key issues are. And usually the way we know is either the stock is underperformed for a quarter, so we attend the earnings call knowing what the key, we should be paying attention to company ABC or XYZ, or after the earnings call, the price action tells us we should pay attention to the K or the Q. Here we have the ability to zero in on key issues even before that occurs. And so if you could do me a favor, Chris, go back to database, and we're going to pull up Silicon Valley Bank. I'll give you an example. Right, so I know what some of you, maybe you and some of your colleagues are thinking, yeah, Jason, but the Q and K are usually published after the earnings call. So go ahead and type in SIVB. Go ahead and click on it. And what we're going to do is scroll down to the bottom where the document feed is, or the underlying documents. Thank you. And you can see that they score routinely as deceptive. And imagine you're going to enter into a call with Silicon Valley Bank. You as a fundamental analyst who covers banks or whatever, however Silicon Valley Bank falls into your coverage universe, could be fintech, could be your venture cap guy like Mark Kroger, and you want to get a view into, you know, is the Fed's raising interest rates affecting the net interest margin of a company? You could conceivably do this. Scroll down to the second quarter 2018 documents, August the 6th. Click on the red line view of that. I just want to show you and your team, and I'll restore those credits. Don't worry about that. This is how you can prep for your earnings season now. For some of the companies where, say, you already have a thesis, right? I would expect banks to be doing badly. Yeah, click on that most deceptive fragment. This is going back. This most deceptive fragment is about their loan portfolio and loan losses. Their second most deceptive fragment in this document, if I'm not mistaken, is about their net interest margin. Yeah, net interest income. So now imagine you're using this to prepare for earnings season and you find problematic relative to your thesis. The Fed keeps raising rates. Based on my understanding of banks, that's got to be hurting these loan portfolios. I want to see if these companies are being deceptive about this. This is as far back as this goes for Silicon Valley Bank. Going back to the second quarter 2018, net interest income in their loan portfolio were their most deceptive fragments. So unambiguously, this is an issue of concern. I definitely want to understand that issue. I definitely, when I'm on that earnings call, want to understand that. I might even in advance of the earnings call be asking them. This is the first quarter in which this became the most deceptive fragment. It then remained their most deceptive fragment through to their most recent quarter, or for their most recent K, which was published at the end of February. So that's how you could do this. We're going to do one more, and then I'll turn it over to questions for you, and then we can adjourn because we've covered, I think, most of the use cases. Any questions on this bit?
Before you said something about downloading all these fragments or exporting them, is that you can do that?
Yeah, it's that is only available via API right now. We
got it. Okay.
Yeah, but we're working on export capability via a report. Like, say you wanted to create a tear sheet, say you're a research analyst, and you want to show your PM. And I saw a sneak preview of that on, I think, Tuesday of last week. And I gave feedback to our developers that they needed additional key bits. It should be sometime this week that when you would log into Redline, it'll say export report, and it would have in the report all of the deceptive fragments, and each fragment's individual score. So you can see that as well as, and the feedback I gave was you need a title page that shows the aggregate score and the period. As the developers did it, it was literally blunt force. It showed all these fragments and their scores in the underlying language, but you couldn't tell what quarter or what company. And so the feedback I gave should be simple to implement, but I've already seen what the report looks like. That'll be the other way to export this. And then via CSV, Chris, is because it's early days for us, we just went live in January. Is that something you'd like to be able to export via CSV?
No, I mean, I think if it's in that report or even APIs, if it can be worked with, I just didn't know what the format was. I just heard you say that earlier, so I was just curious how you'd be able to get those. Yeah,
right now it's via API. You can export each individual. You could, for example, everything I've shown so far, setting up a screen, that could be your API screen. And you can hit the API having satisfied all those criteria. And then you could say, show me most deceptive companies in that meet those criteria, export their top 3 most deceptive fragments and underlying language with, and then it would export that via API. Cool.
Okay.
Indulge me in one more use case. You guys have an ESG team, do you not?
I mean, we have an ESG product, but we don't have like a dedicated ESG. It's all quant, so we don't have a dedicated ESG like fundamental team, at least not on the equity side.
Got it. My is whether or not I borrow time from you to explore greenwashing. Yeah, I don't think there's really a reason to do that. Essentially, what you would do is a similar analysis to this. If somebody's making claims as to being green, you can use Redline to check that. You could also conceivably to see what they're being deceptive about. If they're being deceptive about their green efforts, that would call into question whether or not they're just paying lip service to their green effort. One of our founding advisors, Ashby Monk, he serves on the boards of several pension funds, and he's uploading his board books to my data, which I'll show in just a second. And those board books he is evaluating, and one of the companies that he serves on the board for, he said and suspects that the executive in charge of their movement towards net zero commitments, which is zero carbon footprint, is not really vested, right? He sort of feels like he drew the short straw as an exec having to implement that. And those fragments of the board book are scoring as most deceptive, where they're talking about their net zero commitments. And so he suspects that he's using that to sharpen his questions as a board member. Do me a favor now and click on my data, because you guys, I think, have access to my data as well. So database is all structured. It's all US companies. Oh, interesting. Well, that's unexpected. Not sure why that happened. Well, let's not do that.
Let me try it again here.
Yeah, go ahead. I was just on my data this morning. I wonder if, for whatever reason, Chris, I forgot to enable my data for you. Yeah, oh, that's really strange. But let's not do that. But my data, just in summary, I'm not sure why that's not working. I'll check on it again. But for my data, it's essentially the same product as database, except there you get to upload your own documents. So if, for example, you guys at First Trust, in your own due diligence work, have your own proprietary documents. So for example, a hedge fund client of ours, they do interviews with experts, and they have expert testimonies that are given based on industries, and they're converting those recordings into text now, and they're scoring those because they recognize there's a possible conflict of interest, that if somebody is still working at a firm, that they have lots of incentive to talk up the company and say things are rosy, unless they're disgruntled, of course, because they have a vested interest in the company performing well. And those experts tend to be sophisticated enough to understand that relationship. Likewise, sell side commentary is another. And then Mark Kroger, I'm speaking to you directly because you're in the venture cap space. Some people in their venture cap due diligence work ask founders to quarterly, semi-annually, or annually describe their business and how the business is performing, and are they performing relative to their strategic planning and modeling. In my data, we turn over the power of the algorithm to you guys, and using the upload button, you can upload your own documents. Just hit upload there. I want to see, I'm just curious if, sorry, indulge me. I'm bothered, obviously, as the founder. Yeah, it's not working. Weird. I was just on it like an hour ago. I'm not sure why it's not working. My apologies, it's not working. But anyway, in my data, imagine, if you will, you can upload a document using your file system, and we evaluate it in exactly the same way that we do these annual reports and quarterly reports, and eventually earnings call transcripts. Whatever work you generate, you can have scored, and you have the same data redline premium view as well. So you can see the inter-document view for anything that you generate. And a lot of firms, because alpha is hard to come by, are starting to do their own proprietary work and generate other stuff. They recognize it's hard to extract value just purely out of the annual reports and quarterly reports and even the earnings call transcripts. And so they're doing their own additional work. My data is how you could evaluate that stuff. And I'm not sure why it's not working. Heartfelt apologies. Any questions? And if not, I'll return some time to you.
No, I don't think so. I jotted down some notes here. I have a better idea of navigating the platform, so I will have to spend a little more time with it now that we had this call. Definitely was helpful. Yeah, I don't no questions coming to mind now, but we'll definitely reach out if something comes up.
Cool. So I've got two deliverables for you. One, check on status of my data. And then, Chris, I will restore your 2 data redline views for your benefit so that you can still have 7. If you have any additional questions, let me know. I will, once this is set up, I'll save the recording. I'll put it on our YouTube channel and then create a private page for you guys that only you guys with your passwords will be able to access the YouTube channel with that individual unique login credential. Other people won't be able to see it. And that way you can return to this, and you can, if I'll then request that you send, well, I'll just send it to your colleagues via the link too. Sound good?
That sounds great.
All right, Chris,
Yeah,
thanks for
absolutely.
meeting me first call Monday morning. I hope coffee was a benefit. I hope I was even better caffeine. Until next time.
All right. Thanks, Jason.